Brad Jensen 呢是我们的老朋友了，大家熟悉他呢，主要是出于他对于生物股的研究。其实啊，他在成长股、动能股方面呢，也是很有造诣的。我们一起来看一下。
Hello, Brad. Always good to have you with us again. So we always talk about biotech. This time, I want to talk about the whole market. Okay. Just at your speech, you mentioned 4 major issues to the market right now. Greece, the first interest hike since 2006, and strong dollars, and Puerto Rico. So which issue you think is the most important one?
They're all equally important. I think the strong dollar is really knocking earnings down quite a bit, even though the market keeps going up. A year ago, the S&P 500 was predicted to have $134 per share of earnings. It's down to $114. A good portion of that is a strong dollar. You also have, the Fed hasn't raised interest rates in the last 10 years, and we're about to finally do that, and no one really knows how the market's going to react to it. Hopefully the reaction won't be too much. Then you have the sovereign problem, which is not only Puerto Rico, it's also Greece, obviously. You have a lot of debt issues. And you also have valuation. We're selling about 18 times earnings, which is the most we've done since 2004. Earnings growth the first 2 quarters has been pretty flat. So you have a lot of factors. It's really hard to find compelling valuation in the market right now. You also have some, we talked about this last time when we were in New York. I mentioned last time the Chinese market, which actually has been very volatile, as you know. It was mentioned today that Barron's were talking about a biotech bubble as well, which we also talked about last time, but biotech has continued to move up. Bubbles always go further up than you think and then farther down. But we're probably closer to a sell-off in that particular sector. Doesn't mean there are still not great companies long term, but there probably is going to be a shakeout at some time in the next 6 to 12 months. When, I'd love to be able to tell you, but I didn't bring my crystal ball today.
Okay. So at your speech, you compared the China stock market to NASDAQ back in 2000. Yeah, actually, China's stock market is starting to stabilizing after the government started to interfere.
Well, the government's taking extraordinary measures, but the question is whether that's going to be a temporary thing or whether that's going to be a permanent thing. What's interesting is it does look a lot like our NASDAQ market, where the overall market is not overvalued, but there's a small subsection in the same type of stocks is 99. People forget that a lot of the stocks in our market are 99, like the Johnson & Johnsons, the consumer staples, the AT&Ts, they did just fine. It was the internet stocks that blew up. And the Chinex, I believe that part of the market, before this recent correction was selling like almost 150 times earnings. That's overvalued by historical measures. Anytime you get that kind of valuation, you always eventually have a shakeout. That doesn't mean the overall Chinese market is overvalued, but there's definitely issues within it, just like there was in our market back in 1999.
Then I want to talk about momentum stocks, like this example you give us, Shake Shack. At its IPO, it was only like $20. Then it went up to 100. Now it's down to $50.
Yeah, but when it went all the way up, it was valuing each restaurant, and you've seen hamburger joints are not very complicated things. It was valuing each restaurant at $50 million in value. Where your replacement rate on that was probably $2 to $3 million. So obviously the valuations got extreme, and then of course whatever happens in the market when you have extreme valuations, sometimes it happens right away, sometimes it takes a few months. It's come back to reality, as almost every restaurant IPO that we've had in the last year and a half, like Potbelly, Zoe's Kitchen, they all, El Pollo Loco, they go up at IPO, and so, you know, people like to bid up the hot new thing. That's human nature.
Then what happens when those momentum stocks go bad?
They stay bad for a while, usually. People move on to the next thing, and you always have these, whether it's the internet bust in 1999 or some of the newer busts. We have solar stocks were really big in 2012. First Solar and a lot of the other ones, they went way down. It's really tough to recover. 3D printing's another thing that was a big fad for a while, and all the stocks in there got cut in half. This human nature. We chase performance. Whatever is going up, people like to invest in, regardless of valuation. But eventually, valuation does take over, and then that's when investors get hurt. You go back to the Chinese stock market. It is up tremendously over last year, but most people in it came in late. A lot of them had margin loans, and most investors are lucky to break even though the market is up huge, because most of that money came in after the huge initial gains. So I mean, and the same thing happened in our NASDAQ market in '99. I mean, this cycle repeats.
All right. So you seems very bearish on these three stocks: Tesla, Amazon, and Netflix. But actually, those are very popular stocks among investors.
Absolutely. So, they're great companies, great products. I mean, Tesla has one of the best cars I've ever seen. Netflix, everyone's using. Amazon, everyone uses. But none of these companies are making any kind of profit. Amazon might make a dollar a share this year in earnings. They're selling at $450. That's 450 times earnings. Tesla won't make a profit till 2020 if they're lucky, if they are able to ramp up. Netflix has great subscriber growth, but their profit actually went down this quarter, and they're selling at 200 times forward earnings.
So you don't think now is a good time to buy those stocks?
No. I would avoid them, because if we get any kind of decline, those are the kind of stocks that are going to lead the market down. They always are. So those will be the ones I would avoid. People should be really concentrating on the stocks that are growing, not as fast as the ones we mentioned, but still reasonably valued. The Apples, the Gilead Sciences, the Las Vegas Sands. I mean, things that have predictable earnings, that are selling at a reasonable valuation, that have really good cash flow, and if we do get a decline, you're not going to get hurt too bad.
Okay, then what about biotech? Barron's has an article that said biotech is a bubble. What do you think?
Biotech has been a bubble for a couple of months now, and it has kept going higher, and bubbles always go further up than you think they should and further down. If I'm investing in biotech right now, I'm going ahead and taking profits in some of the small biotechs that have gone up 300, 400, 500%. And any kind of new money is going to companies that have real earnings, they're reasonably valued. Celgene's the example we talked about last time, that has made a couple acquisitions or deals that have helped their long-term growth prospects, and markets rewarded. Gilead Sciences, Amgen, AbbVie. Real companies with real earnings. You don't want to go ahead and overpay for something that's gone up 300 or 400% that may or may not have a great drug 2 years from now. Because sentiment can shift on this part of the market very quickly. In March and April last year, with about a 6 to 8 week span, small biotechs went down 50 to 70%. And just like the Chinese market happened like that, no one saw it coming. But when you get to those kind of extreme valuations, once it starts going down, the momentum builds, and it always goes down farther than you think it's going to go to.
Okay. Well, thank you. Thank you for joining us again.
Well, thank you for having me. Appreciate it.